Here we are with another update of our weekly income and trades for cash secured puts and cover calls, our option income and trades. So let's take a look and see how things are going. It's been kind of a strange week with the market being way down this week and then kind of bouncing back on Friday, and we'll talk about that in a second. But like always, remember to subscribe if you haven't subscribed. I appreciate that. And then do all the stuff YouTubers say to do, like the video, turn on the notifications. And this is definitely not financial advice. It's just what we're doing in our retirement with our money. Good, bad, dangerous, reckless, responsible. You pick the adjective and just run with it, I guess. So let's take a look at our week and see how things went. Okay, this is the week right here, starting on 2/2/26 down here to 2/6/26. And you look at the dates of when I closed some trades. I only closed some trades on Monday, and then I closed a few on Friday. And that's because the market kind of tanked during the week, and there really wasn't anything to close that would have been profitable. So Tuesday, Wednesday, Thursday was just basically me sitting here thinking like, what am I going to do? Am I going to get assigned? Am I going to lose some shares? Am I going to inherit some shares? Am I going to do this? Am I going to do that? The week went on and ended. So this is what happened. So on Monday, we ended up closing a couple trades. We closed the Apple double leverage cash secured put. We had 3 contracts, and we closed that early. Bought it back for 45 cents. It made $255. I had TQQQ in 2 different accounts, 2 contracts in each, and we closed both those at the same time. We actually opened them about the same time, and we closed them at the same time. So we made like $302 combined. This Robinhood one is one that we closed, and then we rolled it forward to April 17th. So originally sold the cash secured put with a 105 strike price. And at the time, if you look over here, the delta was at 0.26. It was trading at 116 at the time. And when I rolled it, it was at 91. So since then, Robinhood has gone down as low as upper 70s. And I think I closed at 80 something today. So I rolled this out to April 16th, actually. And when I closed, I lost $1,170, but that doesn't tell the whole story. Let's go down here and see where we rolled it to. Right here is the 105. So when I rolled it, I got $19.26 credit. And if I pop a 0 in here, you can see that if we hold this till April 17th, and if the price of Robinhood magically goes up to 105 or above, we will keep this entire premium of $1,926. Basically, what I'm saying, if you combine these two together, it will profit $756. Is that going to happen positively? I don't know. But hopefully it does. And this $1,100 loss will end up being a $756 profit once we collect this entire premium, or actually get to keep this entire premium. So that is that. So let's look at some other trades here. So this NVIDIA one here was very interesting. And I made a video yesterday and I posted it this morning. And when I posted it, it ended up being posted as unlisted. And then I was gone all day today. And when I came home, I opened up YouTube and I was looking and I noticed there was 0 views, or like 1 view. And I'm like, what the heck? Like all of a sudden people hate my videos because I'm losing money in options or not making as much. And then I realized it was posted as unlisted. So if you see that video, you'll understand the timing was probably out of whack. But I made that video yesterday about, basically I was assuming that I would get assigned NVDL shares and then I'd be doing a cover call on that probably Monday. And what happened, the NVDL shot up 15% today. So instead of being assigned shares and thinking I was going to do a cover call, I ended up rolling that forward and closing it and making $560. So sometimes you get a little bit lucky. And I made a note over here that NVDL was as low as $74 just as of, I think, yesterday. And then it ended up closing at 84. Here I got 84. So originally when I sold this cash secured put, it was at 92. We ended up doing okay with that. So I rolled this forward, and when I did, come way down here, I lowered the strike price to 80 because the price was at 84.40, and I was able to roll it forward and drop the strike price. So if the price goes back down again, I have a little wiggle room. So if it goes to zero again, that'd still be $1,000 credit. So we're doing very well with the NVDL. So what I've been doing for the past couple months, every Thursday or Friday, I do a cash secured put and I just roll it forward 1 week. And I've been bouncing between the 80 strike price and the 82 strike price. And twice it's dipped down into the 70s, but it comes back up before Thursday or Friday when I roll it forward again. And the premiums have been pretty juicy on that. And I think I'd have to look, but I'm probably approaching close to $8,000 to $10,000 in premium profit in about 3 months from doing this. Probably close to 8,000. And then this one here, this Robinhood, it ran till expiration, and so did this SoFi, these two here. And I assume that was going to happen. But this Robinhood one here, I ended up collecting $946 in premium, and the SoFi one, $118 in premium. I got these in yellow here because these are shares that I've been assigned. So I highlighted these in yellow so I can find them quickly when I go back to look. Let's look at this Robinhood one here, this 120. Actually, originally my expiration date was for 220. Whoever was on the other end of this trade went ahead and closed it early on me. And so I was assigned early. So I ended up buying 100 shares of Robinhood for 120. And when that happened, the price was 83. So you can see I did not do too well on the sell, and Robinhood's been really beat up. It looks like it's bouncing back a little bit, and I was reading some news today. It's expected that it will have pretty good earnings, and hopefully it will bounce back and do well. And I think Robinhood is often grouped in with crypto, and probably too much so. So with crypto taking a beating, I think it has spilled over with Robinhood. But I think when earnings comes out, people will take a look at it and say most of Robinhood's profits are not crypto related, and hopefully it'll bounce back. At least I keep telling myself that. When I got assigned this, and because I got assigned during the day today, I had time to go ahead and do a cover call. So I did a cover call here for Robinhood, 110 strike price, and I'll talk about that in a second. And the premium was 168, which isn't great. But let's say we keep this till expiration. We did a 320 expiration date. So if we hold this to expiration and it expires at zero, that will be a 13.27% return, annual return, if we did this on an annualized basis. 13% return isn't a horrible thing. It's not nearly as good as what I'm used to, but it makes me feel a little better knowing that at least we're getting something out of this. And I'm calculating 110. I'll tell you why I'm doing that in a second instead of 120. The strike price was 120, but because I collected this much in premium, almost $1,000, let's say, it made my actual basis at $110 and some cents per share. So in other words, if I can sell these shares at 110, it's about a break even. I did do that cover call at 110. I'd prefer to do it at 120, but there wasn't that much premium at 120. So what I would do, if this expires on 320 and doesn't get to the $110 strike price, let's say this is at 100, let's say, if there's some premium to be had when I roll this forward or do another cover call, I'll go ahead and raise this to 120 and try to get back to what the original strike price was. That way, this whole $946, if you're doing the math, will be mine to keep forever. So I already have this $946. However, if these shares get taken away at 110, I'm basically giving that money back. But if I went with a 120 strike price here, this premium would have been like 20 cents. So it would have been $20 probably instead of 168. So what I'm guessing is that Robinhood is not going to get to 110 before 320. If it does, that's still okay. I will have made this 168 and kind of break even back here on this trade. So just trying to manage this and make something out of nothing. We'll see what happens. Now, I could be super sad about it, but I'm not. So it is what it is. The SoFi was kind of the same thing. I went ahead and let that expire and took possession of those shares. I didn't roll that forward. So I'll do some cover calls on this. And I did some math, like what would be better, rolling that forward for a couple weeks or taking the shares and doing cover calls. The cover calls, the math worked out a lot better. So that's what I did. If you look over here, the base is actually 2241. So I'll do cover calls probably at 23 or maybe even like 24. We'll see what happens and see how we do on those. So even though we have this $1,000 here, if I highlight this whole column, you see that we still made $1,000 this week. So that's income that I'm using to supplement my retirement. So this whole account here, with all this money, all this collateral, and all these shares, I'm basically using that to generate income. I don't look at this as an investment so much as I do as a tool to create income to supplement our retirement. So let's pop this open real quick. This is kind of like a pie chart of our assets as far as our investments are concerned. This option fund here, this 10% piece of pie here, that kind of represents the amount we have invested in doing our option money. I get comments about options are risky and all this other stuff. So selling options, I don't think is risky at all. As long as you're patient and play the waiting game, it's selling options is a lot about time. You make your money by being patient and with time. And the reason why this is like 10% is because my original plan was to try to generate $5,000 a month selling options to supplement my retirement. Well, if you've been watching my videos, I've been averaging about $10,000 a month. Now, I don't plan on doing that forever, $10,000 a month. I still have my goal of $5,000 a month. It's just been working out to be $10,000. And $5,000 a month is about a 2.5 to 3% return per month on my money. And it's been working out that I've been getting about more like 5 or 6% per month. Now, I know that doesn't last forever, but it's just been working out that way. So I expected to have some good months and some bad months. And it just so happened I've been having a streak of some really good months of 5 to 6%, meaning I'm making $12,000 a month. But in the big picture of things, my big pie chart here, over half my money is in growth funds such as SPY, QQQ, SPMO, and VTI. And then I have income funds such as SPY-I, QQQI, cover call funds, and various things like that. Then we have 10% of our money in cash. That's money that we live off of. And that includes like our emergency fund or whatever. It's like a year and a half or 2 years of income that we would need to live on. So the stock market could really take a dive for the next year and we don't have to worry about it. We don't have to touch it because we have enough cash to live off of for a year or 2 years actually. Now this income fund is money that I generate monthly, and that basically gets funneled into our cash fund and replenishes that. So our cash fund is not going down at all. It's actually growing. I've actually have reallocated some money from our income fund here, this 25%, and moved some of it back into growth funds. Because originally we were going to live off some of this income from these income funds, but we haven't had to use that yet. So I just kind of want to touch on that for a minute because I expected early in the week, if I highlight just this here, we were minus $600. I wasn't really expecting to make much for the rest of the week, but we did end up pretty good with these two here. So if there's ever a week where I lose money here or break even, the money is still flowing. And originally I did these videos on a monthly basis. If I highlight all the trades I did in January, go all the way down here, end it right in here. Actually, I didn't get them all, but for the month of January, we made almost $12,000, $11,553 in just this Fidelity account. And like I said, my goal is to be at 5,000. So this is an unusual, pretty good month and not expected to hit that every single month. So anyhow, not a lot of trades this week. Coming up in the next week or two, I have quite a few things that are going to expire on February 20th here. Now, I do have some cover calls here. Here's a cover call on Robinhood. Here's one on SoFi and a couple more on SoFi. And then this new one on Robinhood. So in a couple weeks, I may be getting assigned some more shares. These other ones might be some additional cover calls coming up, but we'll wait and see what happens. who knows, maybe the market will really bounce back the next week or two, and these will all be rolled forward into cash good puts. Who knows? We'll wait and see. So anyhow, that wraps it up. Once again, the weekly total was $1,011, which is pretty close to what I originally expected to make each week from this project when I started doing this more seriously. So if you like this type of thing, make sure you subscribe. It's not financial advice. And as you can see, not everything goes perfect every week. And we'll see you in the next video.